Okay. Now coming to, sir, when we were discussing the format, you told if exemption information is available, we have to consider it and we have to claim it. We have to consider and claim it. Yes, sir, I told. That is only when question is specifying about it. That is, whatever gross gain I have, whether short term or long term, if I have reinvested it in a new asset within the specified time given in the respective section, I can claim the exemption. I can claim the exemption. And most of the section will tell what is the amount of exemption means the cost of new asset or the gross gain, whichever is lower, guys, except 54F. Except 54F. So the gross gain or the cost of new asset, whichever is lower is the exemption. Means in simple, you cannot claim the exemption more than gross gain. Gross gain. So please take care of exemption only when question specifies about it. Okay, sir. We will take care. Sir. You take care of yourselves. Sure. Coming to the exemption, I have made it very simple in this table, guys. Very simple, provided you already have complete knowledge of it. Clear? And here also you will be able to get an idea. Don't. Guys, while checking the exemption, few things which we have to keep in mind. Which is the asset I have transferred? Which is the asset which I have to purchase? Within what time? Within what time? And once I purchase the new asset, what is the lock-in period for it? How long I cannot sell it, guys? Fine, we will see that. Exemption available in computation of capital gains. First, section 54. Applicable only for individual and HF. What asset is sold, sir? Long-term residential house. Which is the new asset purchase, sir? Residential house. Within what time, sir? If it is a purchase 1 year before or 2 years after the date of transfer. If it is a construction, within 3 years from the date of transfer. Hope you are understanding that math minus to plus. So for purchase 1 year before or within 2 years from the date of transfer. If it is a construction, plus 3 years I have mentioned, means within 3 years from the date of transfer. Okay, sir. Maximum exemption would be 10 crore. Sir, I have purchased a new residential house for 15 crore, sir. Cost is restricted to only 10 crore. Only 10 crore. Yes, sir. I will just show you. Just a minute, guys. This is a part of my regular provision book, but still just an example I will take and explain you. Yeah, you can observe you. Gross long-term gain, assume 2.05 crore and cost of new asset is 3 crore. How much we will take here? 3 crore only. What is the exemption available? Gross gain or 3 crore, whichever is lower. 2.05. 2.05. Next, sir, cost of new asset is 1.55. 1.55 compare with 10 crore. Take whichever is lower because cost is maximum restricted to 10 crore. So here it is only 1.55 crore. Compare this to 2.05 and 1.55. How much exemption I can claim? Only 1.55, which is lower. Okay. Next, actual cost is 12 crore. So how much should I take? Only 10 crore. Now compare 10 crore with 7 crore. Whichever is lower is exemption. 7 crore. Next, actual cost is 15 crore. 15 crore or 10 crore, whichever is lower, 10 crore. Compare this with 12 crore, whichever is lower, 10 crore. Allowed as exemption. Allowed as exemption, guys. Yes, sir. Next, 54B, which who can claim exemption here? Individual or HF. Which is the asset sold? Agriculture land. And at least 2 years before the transfer, it should be used for agriculture purpose, guys. Then, which is the new asset purchased? Agriculture land, sir. Within what time it has to be purchased? Within 2 years from the date of transfer. Next, 54D. For whom it is applicable? Geniuses. Geniuses. What has happened, sir? Compulsory acquisition of land or building, which is forming part of industrial undertaking. Now what should I purchase, sir? New land or building, which is forming part of industrial undertaking for my own business. Here also the condition is, whatever land or building, which is compulsory acquired now, at least 2 years before the transfer, it should have been used for industry purpose by the assessee. Now, within what time the new land or building should be purchased, sir? Within 3 years from the date of transfer. Then 54 EC. Any assessee can claim deduction exemption here. Which is the asset transferred? Long-term capital asset being land or building or both. Now, what is the new asset I should purchase? Specified bonds of REC, PFC, IRFC or NHEI. Within what time, sir? Within 6 months from the date of transfer. And here also, guys, there is a maximum exemption available, which is only 50 lakhs. Which is only 50 lakh. Maximum exemption under section 54 EC. Yes, sir. Under all these sections, guys, under all this section, what is the amount of exemption, sir? The cost of new asset or the gross gain, whichever is lower. Whichever is lower. Then 54F, applicable for individual and HUF, which is the asset transferred, long-term capital asset, not being a residential house. What you have sold is not a residential house. But what new asset you are purchasing is a residential house. Within what time, sir? Same like 54, guys. Same like 54. Please be careful. 54 is from residential house to residential house. Whereas here it is not from residential house to residential house. But time limit and all is same. If it is purchased 1 year before or within 2 years from the date of transfer. If it is a construction, within 3 years from the date of transfer. Okay, sir. Here also maximum exemption is 10 crore, guys. Means if actual cost is more than 10 crore, we will restrict it to 10 crore. But here one twist is there. What does it means? Guys, you have to compare the cost of new asset with net sale consideration. You know net sale consideration in the format na? That is full value of sale consideration minus expenses on transfer. Compare the cost of new asset with the net sale consideration. If the cost of new asset is more than net sale consideration, then entire gross gain is exempt. Gross gain. Sir, what if the cost of new asset is less than the net sale consideration? Then only proportionate of gain is exempt. For which we have to use the formula, which I have made it. You can see here. If you want, you can also take down, make a note of it. 54F. When the cost of new asset is less than net sale consideration, what is the amount of exemption, sir? Cost of new asset divided by net sale consideration into gross long-term capital gain. Into gross long-term capital gain. Okay, sir. Next, let me just discuss one illustration. Any doubt? I will repeat the formula. This is only when the cost of new asset is less than the net sale consideration. The formula would be amount of exemption is equal to cost of new asset divided by net sale consideration into gross long-term capital gain. Gross long-term capital gain, guys. Yes, sir. This is only for 54F. Only for 54F. Let us discuss few illustration here. Guys, only for 54F, it is bit different. Please listen here. Listen. Things will change here. First, let us take the cost or 10 crore, whichever is lower. Cost or 10 crore, whichever is lower, 4 crore. Here, 1.75 or 10 crore, whichever is lower, 1.75. 12 or 10, whichever is lower, 10. 15 or 10, whichever is lower, 10. Okay, sir. Now compare. Now compare. While comparing, you will compare this with the net sale consideration. Okay, sir. Now listen. Is 4 crore more than 3 crore? Yes. How much is exempt? Entire gross gain. Entire gross gain. Next. 1.75. We will compare with 4 crore. Is it more? No, less. How much is exempt, guys? How much is exempt? Listen here. Gross gain is how much? 2.05 divided by net sale consideration 4 crore into the cost of new asset 1.75. How much ever you get, that is the answer. Leave it. You need not calculate because we'll proceed further. Next, 10 crore, is it less than 15 crore? Yes, again same math. What is the gross gain? 7 crore divided by net sale consideration 15 crore into cost 10 crore. 10 crore. Don't take 12. We have already restricted it to 10. Next, same way. So, 10 crore less than 20 crore. So again, same calculation. What is the gross gain? 12 crore divided by net sale consideration 20 crore into cost of acquisition 10 crore. This would be the amount of exemption, guys. This would be the amount of exemptions. Hope it is clear for you. Let us move forward. Here also maximum exemption is 10 crore, which we already discussed. Some important shortcuts with respect to exemption, guys. Withdrawal of exemption means if the new asset is sold within certain time, then whatever exemption you would have already claimed will be withdrawn. In what pattern it would be withdrawn, we have to see. First, what is the lock-in period we will see. I have given it as a note, you can see. Lock-in period of a new asset is 5 years for section 54 EC. Whatever bonds you purchase, the lock-in period for it is 5 years. You cannot even pledge it for 5 years. Then for all other sections, the lock-in period for new asset what you have purchased is 3 years. If you have sold it within this lock-in period, then what, sir? For section 54 EC and F, if the new asset is sold within the specified period in the respective section, then the capital gains exempted earlier is taxable in the year of transfer of new asset. Guys, simple. 54 EC is the bonds and F is new residential house. If you have sold this within for bonds 5 years or for house within 3 years, then on the sale of new asset, you will compute capital gains? Yes, sir. For that, you also have to add whatever exemption you have claimed earlier will become gain now. So in the year of transfer of new asset, there will be two gain. One gain on the transfer of new asset and another is whatever exemption you have claimed earlier will now become taxable for you. Okay, sir. For other sections, for 54B and 54D, you have to hold the new asset at least for 3 years. What if I have transferred it? If the new asset is sold within the specified period in the respective section, then the capital gains exempted earlier is reduced from cost of new asset while calculating the capital gains on the transfer of new asset. That is, when you have transferred a new asset within 3 years, you will compute capital gains on it? Yes. While computing the capital gains, you will claim cost of acquisition? Yes. But from actual cost of acquisition, reduce whatever exemption is already claimed earlier. Whatever exemption is already claimed earlier. Clear? Yes. So for example, okay, only for this, at least one example, one illustration, I will cover it. Yeah, you can see this is an example on section 54, guys, which has same provisions. Illustration 2. The gross long-term capital gains is 2 crore and the cost of new asset is 3 crore. So how much exemption you can claim? 2 crore. Correct. Now how much exemption you can claim? Cost or gross gain, whichever is lower. 2 crore. You have claimed it. Now new residential house you have purchased. You have to hold it for at least 3 years from the date of purchase. You have not held it. If the new asset was sold after 18 months for 5 crore, then short term, assuming it is before the 23rd July. So we have to compute short term capital gain, guys. What is the full value of sale consideration? 5 crore. From that, can I reduce cost of acquisition? Yes. Can I claim full 3 crore? No. My actual cost is 3 crore. But from that, whatever exemption I already claimed, we have to reduce it. So what is the net cost now? 1 crore. So 5 crore minus 1 crore, 5 crore, 4 crore is the short-term capital gain. Did you understand? For these three sections, while computing the capital gains on the transfer of new asset within the specified period, from the cost, reduce the amount of exemption which is claimed earlier. Sir, what if by chance, if I had claimed entire 3 crore as exemption, then cost becomes 0 for you. Cost becomes nil for you. Yes. So, next, applicability of sections. For individual and HF, it is only 54, 54B and F. Whereas other section for everyone. Everyone includes individual HF also. Next, type of asset transferred. That is the old asset which you have transferred. Which one should it be? Short term or long term? For 54 EC and F, they have clearly told long term. Whereas for other section, it is either long term or short term.